Good evening from New York. I'm Chris Hayes. One thing that the incoming Trump administration and its billionaire backers are very excited about is deregulation. Because no one likes regulations, right? All those business-killing laws and annoying obstacles. Amazon founder and Washington Post owner and $1 million donor to the Trump inauguration, Jeff Bezos, is very optimistic.
If we're talking about Trump, I think it's very interesting. I'm actually very optimistic this time around that we're going to see. I'm very hopeful about this. He seems to have a lot of energy around reducing regulation. And my point of view, if I can help him do that, I'm going to help him, because we do have too much regulation in this country.
Too much regulation. So where do we start? What do you think is a possible primary target in this war on regulations? How about the money in your bank account? According to the Wall Street Journal, in recent interviews with potential nominees to lead bank regulatory agencies, President-elect Donald Trump's advisors and officials from his newfound Department of Government Efficiency, which is just a thing that's not connected to the government, have asked whether he could abolish the Federal Deposit Insurance Corporation. People familiar with the matter said. First, don't miss the fact that these possible federal regulators are getting interview questions from DOJ officials, when DOJ is not an actual government thing, just a side product for Trump-supporting rich guys, Elon Musk and Vivek Ramaswamy. Deregulation is one of those things that sounds great, I think, to everybody in the abstract. I mean, we have all in our lives bumped up against some regulation and had to file some forms or deal with like a weird part of the building code that felt like a pain and unnecessary. And also, some regulations really are bad. For instance, the regulations that prevent many cities from building as much housing as they really need for their people. But that sure isn't what Trump and his billionaires are talking about. And they're only talking about it because of America's frequent amnesia about why some regulations exist to begin with. It reminds me of this weird and cringy right-wing meme that goes around the kind of Musk bro Twitter sphere. Here it is being recited this year at Liberty University.
Hard times create strong men. Strong men create easy times. Easy times create weak men. And weak men create hard times.
Ah, yes. When things are tough and bad, strong men like Vivek Ramaswamy rise. And only through that strength can we secure a life of peace and comfort. But wait, that makes all the men soft and weak again? And then the bad times come back, and the cycle repeats. Yes, it's a dumb sort of online tough guy kind of thing. It's particularly funny because I think that a lot of times the people posting about it are basically like 15-year-olds playing video games. But I am reminded of it lately because I think it maybe does actually capture a dynamic we've seen before in America, and we are starting to see again right now, which is how our appetite for regulations comes and goes in cycles. We have regulation for a reason. Bad times, catastrophes, and disasters bring about good regulations. Good regulation creates the conditions that prevent disasters. After you've had the Chicago fire or the Triangle Shirtwaist fire, that's when you're going to push for fire codes and factory safety regulations, and fewer tragedies result. And then you go around long enough without a tragedy, and you think, geez, we really haven't had a fire in a while, not like a big one. Do we really need all these building codes? You think you've vanquished the problem. And the historical memory of just how bad things can get has faded. And so, get rid of these regulations. And guess what comes roaring back? I mean, we have seen this exact cycle with financial regulation. Back in the roaring 1920s, the age of easy credit and securities, there was a huge push to deregulate banks and businesses. And you'll never guess what happened. A stock market crash and a Great Depression. An experience so foundationally traumatic for America that FDR's New Deal government rolled out a whole slew of banking regulations, including, you guessed it, the FDIC, that's the Federal Deposit Insurance Corporation, to stop bank runs and shore up the financial system. And that system worked really well. We basically, in this country, stopped having bank failures for decades. And as time went on, there was, of course, a push to deregulate, right? Starting in the 1980s with Reagan and the savings and loans, and then in the 1990s with Clinton, and finally in the aughts under George W. Bush, it wasn't the 1930s anymore. We figured it out. We didn't need financial regulation. We were in good times. We should just let banks operate more like casinos and use your deposits to make tons of leveraged bets on risky mortgages for overvalued homes. And you'll just never guess what happened.
Tonight, meltdown. The American financial system is rocked to its foundation as top Wall Street institutions topple under a mountain of debt. Coming up tonight, how did it happen? What's next? And how safe is your money?
It was America's worst, most devastating financial crisis since the Great Depression. It just created tremendous amounts of misery and destruction, screwed up so many people's lives, and lasted in its effects for a decade. So, after that, we got another round of new regulations, limiting just how fast and loose banks can play with your money. And that new regulation drives bank CEOs generally crazy. They don't like it, but it's worked pretty well. Do you remember last year we had a couple of high-profile bank failures, Silicon Valley Bank, First Republic, and Signature? Together, they were actually worth more than all of the 25 banks that failed in the Great Recession. But instead of another systemic failure, the system held, in large part because the regulatory environment stopped it from spreading and cascading. And so now, some in the incoming Trump administration are openly talking about getting rid of the FDIC, which is one of the greatest banking regulation inventions of all time. It's the agency that guarantees if your bank does fail, you get your money back, insuring it up to $250,000. It also means if banks start to look like they're going to fail, people don't rush to take their money out, thereby causing bank failures, right? Bank runs. It doesn't cost taxpayers anything. The money for payouts actually comes from a premium the government charges the banks. Ingenious. The riskier your bank is, the higher its insurance premiums. So you can guess who doesn't like this system, who would rather not pay into it. But it's a system that helped restore American confidence in banks and helped banks thrive along the way. As the Journal's reporting noted, FDIC deposit insurance is considered near sacred. Any move that threatened to undermine even the perception of deposit insurance could quickly ripple through banks and in a crisis might compound customer fears. Yeah, might do that. Might do that if your deposit insurance went away. But the incoming administration and the Bezoses and Musks of the world don't seem to care. They want to have to operate with fewer rules designed to protect the public, and not just on banking, but on scores of issues, including the vaccines that keep you and your kids safe from diseases like polio that once ravaged the country, as you'll hear later in the show. Strong men stuck in the cycle of overconfidence in their power to deregulate America because they've enjoyed the stability that comes with good regulation. We can probably guess what will happen next.